Alright, so we'll go over the trades that I've taken last week. Um, I've taken 4 trades last week, right? I've taken 2 EUR USD trades. I've taken a gold trade, and then I've taken a GBP USD trade as well. So we'll quickly go over the logic behind all of those trades. So I got 4 wins, 4 out of 4. So great week for me last week, and currently I've taken 2 trades this week. So once they play out over the weekend, I'll do another trade review over those trades. So yeah, we'll go over what I was seeing last week. We'll start off on a weekly time frame. On a weekly time frame, I was saying that we've had the sell side sweep displacement on the weekly time frame. We inverted this weekly fair value gap. So on this week, I was saying in the weekly outlook that I wanted to see some open low high close delivery on this next weekly weekly candle into this weekly inversion fair value gap, and then we got that right. We opened up on the week, we traded lower into the inversion fair value gap, and that was where the low of the week formed, and then we pushed higher, took out the buy side, and that was the high time from draw. So on DXY, currently in this range, right? So the only things you want to do is look for either shorts on the range highs or longs from the range lows. Shorts from the range highs is a bit more lower probability, right? Because high time from order flow is bullish. But if you get some sort of double confirmation or some sort of hourly displacement change in order flow that indicates that price wants to come for the range lows, then yeah, you can take a counter trend trade towards the lows, and it's a high probability drawing liquidity, right? Because manipulation on the range highs, displacing back into the range, then logically price will go for the range lows. But what's also resting below the range lows is a daily fair value gap. So it's logical, especially with this daily kind of closure, to assume that we will go for the range lows and the daily fair value gap as well. So starting off on DXY, on Monday pushed higher, took out the range highs, left a flat open on the weekly daily time frame. It's not there anymore, but at the time you can see on the hourly time frame, price gapped up higher, and we had this flat open, which usually indicates some sort of manipulation, and that price is likely going to come back for the lows. We have this low, this low, this low, and then we have the daily fair value gap. So when you see the price pushing up higher on a Monday, the low of the week is likely not in yet. So the logic was that in terms of weekly profiling, we can take a counter trend short on DXY short towards the range lows into the daily fair value gap, and then this is likely where the low of the week is going to be placed in, and then we can look for longs back to the range highs, and then a higher time frame targets. So the range highs came back inside of the range, and at this point you don't want to look for the DXY shorts, right? Because inside of this range we have this opening gap, which will pose as some sort of resistance for price to come all the way for the range lows, and price can even go for the range highs again, coming into this gap, push higher, and then go lower. So what you want to do in this case is you want to wait for some sort of double confirmation, right? What do we have here? We have hourly fair value gap, and if you go into the 15-minute time frame, we have this high engineered, we have a sweep inside of the hourly fair value gap, and then we displace lower, and then we invert these imbalances, showing that there's actually some sort of double confirmation, sweep, displacement, and another high engineered sweep into it, displace lower, invert these fair value gaps. So at this point, this becomes your new invalidation. Price shouldn't come back for this high because we've inverted these imbalances, showing this is a bearish sell side delivery, and price is likely gonna go attack the sell side. But then at the same time, yeah, you could argue that we've just swept the pre-London lows inside of this gap, and price can now push higher. So for me, even though this was some valid double confirmation, right, I didn't actually take an entry here. I waited for another confirmation. And what do we have here? From New York and lunch, it was a consolidation profile, right? And we had this BPR. We engineered some highs. We swept those highs into the BPR. And if you go on a 30-minute time frame on this day, we have this BPR sweep into the 30-minute BPR, displace lower, and then we formed a new order block here. And at this point, that was my confirmation to go long on euro, and then target these lows, the range lows, and then the daily fair value gap. So if you go on EU, same thing. Same thing, took out the range lows. We have the range highs and the daily fair value gap as the draw on liquidity. Hourly fair value gap, price respected hourly fair value gap, pushed higher. So yeah, same thing as DXY, pushed higher. So you could have taken a long inside of this once we inverted these imbalances, but then I didn't feel too comfortable because we swept this high and closes the SFP, which indicates that price could sell off from the imbalance and then come for these lows again. So wait for a double confirmation. We took out this low and we had SMT of DXY at the lunch lows, and then we pushed higher and then formed this new repulsion block. So my entry was at the next open low high close candle into the propulsion block, and then my invalidation was below the propulsion block, because you don't want to see price to lose this OB that we just formed, right? So yeah, also BPR, price trades lower, price trades higher, so on. Even on the 5-minute it was a BPR, so you don't want to see price to lose this 5-minute fair value inversion fair value gap as well. So took a long there, and then we pushed higher into the daily fair value gap, and all of these equal highs, right? Smart money reversal, low risk sell, low risk buy, and then this first stage redistribution phase, or silver bullet, whatever you want to call it. This is the most high probability confirmation type trade because we confirmed the low risk buy here, which confirms that we are in a market maker buy model. And then yeah, price uses OB to push higher and take out all of these low resistant highs. Then at this point, took profits at the daily fair value gap because this is a reversal. This is a key level that price can reverse from the range highs into the daily fair value gap. So at this point, I was sitting on my hands and I was waiting to see what price would do, because we've had a manipulation into the daily fair value gap pre FOMC, pre CPI. So at this point, you want to see what CPI does here. What do we have here? We have the high time frame key level being a daily fair value gap. We've swept the we've had a sweep of the London highs inside of the daily fair value gap, displaced lower, and then at this point, this is the low risk sell, right? We'll go on hourly time frame, it was a bit more cleaner. This is the low risk sell, right? But most high probability reversals always have some sort of double sweep, right? We have the high engineered, which is the daily fair value gap, retrace lower, and then we sweep the high that sweeps the initial high, and then you get that breaker formation. So, you know, high time frame key level, come into it, retrace, sweep the initial high, stop out early shorts, and then break lower, and then you get something like this. So yeah, we got that right. Sweep the initial high that tapped the daily fair value gap, went lower, and then we check out this internal low. So technically this is a market structure break, but this can also be a stop run into this hourly imbalance and then come for these highs again. So in order to confirm that this is that we are in a market maker sell model phase. You want to see price to respect this imbalance and then break through the lows, and then this would be your propulsion block, right? Which we got here on a 4-hour time frame. We have this OB, came into the OB, closed below it, and then we formed this propulsion block. So the entry that you could have taken, we also inverted this fair value gap as well. The entry that would have been valid, which I should have taken, was something like this, right? This would have been a 2-hour trade, and then we also have on the daily time frame, we also had all of these downside targets. We had these daily equal lows, which could have you could have easily extended the target towards these time frame lows as well. But if you wanted to play it safe, then you know the current week's low would have been a good TP for at least 2R. So I should have taken that trade, but I didn't. I was a bit hesitant, right? Even though we had the 4-hour propulsion block, the issue is that I wasn't liking that DXY didn't tap into this daily fair value gap. But the thing is, you can argue that's SMT because EU tapped the daily fair value gap, but I wasn't 100% confident that a high of the week was set yet. I wasn't too sure, but once we had this candle push up and then we ran this high on a 15-minute time frame, and then we push lower here and we formed this order block on a 15-minute time frame, I was pretty sure that okay, high of the week's definitely placed in at this point because we're respecting these 4-hour bearish PD areas. And I was thinking of taking a short here with my invalidation here, and then TP'd all the way down here. But the reason I was hesitant on taking this OB was because we've seen massive downside since we've already seen 64 pips down to the downside for the whole day so far. So I wasn't too confident in also taking this, but this would have also been a valid setup, right? If you shorted here with your validation at this manipulation high, just like here, how we had a manipulation of the lows and then we formed this OB, you could have taken the trade here with your stops there. But yeah, I wasn't too comfortable because the daily open was, you know, somewhere here, and we're already trading way below the daily open. The most high probability shorts is always above the daily open, or at least somewhere around the daily open, but here we're already well below it. And even on this day, at this point, you could argue as well, oh, this is kind of a premium from the low of the day, right? But the daily open was all the way from here. So at this point, if you're long in here and your stops there, you're still trading around the daily open. But here we were kind of already way below the daily open, so I wasn't, you know, too confident taking this. And then also there could have also been a chance that price consolidates here, and we could come back for these highs once more, even though logically it wouldn't make too much sense to come back for these highs. If we just consolidated here, heading into the daily close like we did here, we could have, you know, came back for these highs again, and then I would have been sitting through some uncomfortable drawdown and maybe even a potential stop out. So I wanted to just wait for the daily to close and then see if we get like a manipulation into this 50-minute order block and then sell off. But in Asia session, we just dumped and formed a new hourly key level to look for shorts the next day. Which was here. So on this hourly fair value gap, we had this high that was engineered, and at this point, this is the next day, right? So you want to see it's an open high low close delivery, and at this point we had hourly fair value gap and we had a high engineered. So this is a logical area to anticipate to have the data form. The only thing I didn't like about it is that we were trading inside of a deep discount, right? From this range low to range high. in the market maker sell model, we're already trading inside of the lower half, and the most high probability trades inside of the market maker sell model is always inside of the premium of the range. So somewhere around here, somewhere around here, you want to be getting in towards the top, not towards the bottom. So yeah, that's the only thing I didn't like about it, but because of how obvious the draws were this low, and then we also had these equal lows, I was willing to at least take the rest somewhere around here, because this would have been a plus sweep of clear daily bias, clear drawn liquidity, high engineered, so we have some sort of liquidity inducement, whatever, inside of a key level, sweep into the key level, session time, equal lows, displacement, high time frame order flows on our side as well. So yeah, everything was pretty much there. And then what do? We swept the high into the key level at, and it had this New York reversal profile, had a strong bearish close, formed this bearish order block on the hourly time frame, and then I scaled down to the 15-minute time frame, and I shorted this 15-minute fair value gap here. Here's my entry. I shorted at the 15-minute fair value gap, stops at the validation high, OB, inversion fair value gap, bearish fair value gap, so multiple bearish PD arrays on the sell side. And then my TP was initially the daily lows, right? This low for 2.6R and this low for 3.27R. But the reason that I actually held for only this low right here for 1.5R is because since we're trading at such a deep discount, I was saying to myself, if price sweeps this low and then gives some sort of retracement and then comes back to my break even, then I would have pretty much lost all my profits at that point, and I could have just took profits at the lows. If I was in from somewhere around here, then it would make more sense for me to hold below the range lows, because price is not going to give some sort of deep retracement, or price is unlikely to give a retracement all the way back to my break even before going lower. But at this point, because I was short from such deep discount, I was thinking, okay, cool, price can come back all the way here and then still sell off. So I was thinking, okay, I might as well just take profits here. And then at the same time, because I was already in GU as well, worst case scenario is I TP here, and then it comes for my break, and then GU comes for my break even, and then it's calm. I still book some profits at least, right? But if I didn't take profits here, worst case scenario is I get a break even on Euro, break even on GU, and obviously best case scenario, if I held there, I would have got 3R on this and then 3R on GU, which I got. But yeah, at this point I just had to weigh out the probabilities and what makes the most sense in my scenario, and this made the most sense, so I just took my profits here for 1.5R, which I was fine with because I had GU and gold trades running anyway, so I was fine with it. And then obviously it dumped way lower than I anticipated. It would have been a 5R trade if I held all the way to the lows, but it's calm. So that was Euro. And then the pound trade, similar thing on pound, right? Pound, previous day high sweep into this daily fair value gap, came into the OTE of this bearish dealer range, tapped the daily order block as well, and then we displaced lower, and then we came low, we have SMT at these highs of Euro, made a fell swing, bearish propulsion block, and then we're just in clear bearish order flow on the 4-hour time frame, right? And then what I took the next day was a lower time frame confirmation. I could have also taken a tail sweep trade with my validation at this high and then my TP at this low, but I wanted to wait for a lower time frame confirmation instead, which is also fine. But the same thing as Euro, right? Exact same setup. Hourly fair value gap, high engineered, sweep of the high into the hourly fair value gap, and then sold off. And then on a 15-minute time frame, we formed this 50-minute fair value gap. So literally exact same thing as euro. Took the same thing on pound, and the reason I took pound, even though it's the stronger pair, is because pound is trading inside of the premium of the range, right? If you use this low to this high, at this point pound was still trading inside of the premium of the range, while euro was in the deep discount. So I felt more comfortable to take euro being the lagging asset, because if DXY is moving higher anyway, pound and euro will move down regardless of the strength. So it made logical sense for me to take this short here, and it was a 3.24 R trade anyway, so it was a good risk to reward. And yeah, sold a 50-minute fair value gap, dumped, and then we had this retracement in Asia into the 4-hour fair value gap, and then we sold off again, and then took out the Monday lows, and then I could have held for these lows as well, right? Would have been a 4.27 R trade, but 3.2 R trade, I was happy with it anyway, so I just booked my profits there. And then yeah, very clean on daily time frame, right? Range high, range low, came into the OTE, went all the way for the lows, and then yeah, we basically have the same profile this week as well, right? Retrace into this daily fair value gap, Monday range play, and I was starting to sell off again, which is why I'm also in euro shorts, but we'll cover that for next week, right? And then we'll quickly go over gold being the last trade. Gold, on the daily outlook, I was saying that I wanted to see sales from this daily BPR, right? We have a 4-hour consolidation, so we as I was saying earlier, want to either look for longs from the range lows or shorts from the range highs, and the range highs align with this bearish dealer range we have, right? We have the high range highs inside of a daily fair value gap, so bearish AMD. We swept the range highs into that daily fair value gap, and then the hourly time frame we had an hourly deviation, right? Formed this hourly imbalance, which you consider to be the lowest sell, right? Came into it, sold off, broke below the lows, but at this point you don't want to blindly short after we sell off from this fair value gap, because same scenario here, we've taken out this low into this hourly imbalance and order block, so price can come back for these highs again. And we also formed trendline highs, which is not a proper invalidation. So at this point, yeah, you want to look for some sort of double confirmation, which is what I did, right? On the 4-hour, we have this high, which we swept, which is also the Asia highs, I believe. These are the Asia highs. We swept the Asia highs, and then all I wanted to see to confirm that we were bearish is a closure below this imbalance. And at this point, I know what I was the way I view the markets is that if I'm looking for a potential bearish move and I see something that looks kind of bullish, right? For example, we have these imbalances on the 1 hour and 4 hour, and then we're seeing a rally higher. What I'm thinking is that, okay, if the market likes to manipulate people and bait people into going long when there's a bearish narrative, how is the market going to do that? It's going to give a fake bullish entry model. So what I was seeing here was we had a sweep of these lows into the hourly fair value gap and order block, and then we've seen a push higher, and then we formed this 4-hour bullish order block. But at the same time, we ran some sell stops. So we run some buy stops, sorry. So the logic there for me is to confirm that this is a stop run and we're gonna go lower. You want to see these hourly imbalances to fail, which means you can just which shows that this push higher to form the bullish OB was actually just a stop run into to take out these trendline highs, and we're going to continue lower. So what I did was waiting for these hourly imbalances, my hourly confirmation, and then once we got that, this is confirmed the high of the day for me with the bearish open high low close narrative in mind, anticipating bearish daily profile, and then I shorted here, validation at this high, and if price gets above the hourly inversion fair value gap, then my idea is wrong, right? This is basically a BPR. So I shorted here, and we had these equal lows, Monday lows, and then we had the previous week lows as well as the drawn liquidity. Shorted here, and then I held all the way for the range lows for 4.5 hour trade. So I think in total, same things, right? Range play into daily fair value gap, equal lows on gold. Same thing here, even though those are not equal lows. Same thing here, range. Sweep of the range highs into daily fair value gap, range, sweep the range highs into the daily fair value gap, and then we got equal lows as a drawn liquidity. So same framework that I took on all the pairs on this week, and then also there's counter trend long from the range lows to the range highs on euro. So I think until this is a 3.2R, gold was 4.5R, and then pound was also a 3R. So 3, 6, 10, 10.5, 11, and then also the euro shorts for another 1.5. So I think around 13R, just from this week alone. So yeah, very happy with the week, and then we'll also see if this current trade that I'm in plays out on euro. So yeah, same thing, deviation from this daily fair value gap, sold off, and I also took the low risk sell here, unlike last week, because this week I was confident that we have equal lows here, these lows and these lows. So I took the low risk sell here, so we'll see if this trade plays out.